I would like to welcome each and every single one of you here to be a part of this panel. And Brenton, welcome. Marius, welcome. And FARZAM, please lead the show, man.
Awesome. Thank you so much, Ron.
Cheers.
Good afternoon, everybody. I hope you're all enjoying the conference. We'll get straight into it. I won't go into intros of the different panelists. I think there's enough information about them online. Buchi, very welcome. We're still waiting for one panelist, Marvin, who's had some technical difficulties getting in, but we'll start without him. So we've got representation here on the panel really from the east of Africa with ROSELYNE and Marvin, if he joins, in Kenya, from West Africa, Buchi, South Africa, Brenton and Marius also a general manager for Luno across Africa, so also responsible for Nigeria and other countries. So guys, very, very welcome. Let's get straight into it. And ROSELYNE, let's start with you. I'd like to just start with some of the trends you're seeing as far as crypto adoption in Africa. We're going to talk about the trends a little bit about regulation, a little bit about obstacles, and then what are the necessities that are required to promote adoption. So ROSELYNE, over to you.
All right, thank you so much. The first, I would say, major trend that I'm seeing is peer-to-peer trading in the sense that people are fearing way less than before because, for instance, with Kenya, when the central bank issued a cautionary notice, and well, that was pretty much like, you guys are on your own. If you dare do this, then that was really a fearful time. But of course, the first few guys really just went in. Call it blind faith, call it audacity, whatever you will, or boldness, they went out. So more guys right now are just into peer-to-peer trading because they're not looking out for, that government-to-government or bank-to-bank support, even as what we saw with Nigeria, because then a lot of people then did tweet their experiences about banks shutting their accounts with their funds still there because they were either in one way or another having or facilitating a crypto transaction, some were by association, and really it's as far as you could hear the experiences after another that they have this denial of service. So people are less afraid. People are like, if I can make money from this in the middle of a pandemic, I'm going to do this. So that's one of the major and most amazing trends that I'm seeing.
What platforms are people using in Kenya, ROSELYNE? Just to wrap up on that, you said P2P is a big thing. There still isn't support from the government, particularly the central bank. Are there plenty of platforms? There are a lot of risks, I would imagine, that we're seeing in Kenya. Please elaborate.
All right. So in terms of risks, then the first question that I usually get asked about, how can I buy Bitcoin is there's been a backlash from scams like, the ones that had really hit around the ICO time, the Bit Clubs and the BitConnects and platforms like that. So the first question that I usually get now is, how can I buy? So apart from local Bitcoins, then Paxful has really been huge here. Although they don't have like a physical office, then the service is still available. A few other exchange platforms, FTX, have come on board offering the crypto onboarding ramps. So I would say those are the top three that are either frequently used or known, or at least partly the gateway services that someone would get to use.
Thanks so much, ROSELYNE. Let's go to the other side of the continent. Buchi, welcome. We're really excited to hear from you about your experience, particularly in light of the recent Central Bank of Nigeria directive to the banks to stop offering banking services to all crypto providers. So that's affected several people on this panel here, yourself included, at Quidax. So tell us a little bit about that, because I think everybody's interested. What does that mean for crypto adoption in Nigeria? Has all that volume moved off into P2P? What are you seeing on the ground?
Okay, thank you so much, FARZAM. Yes, that's very, very hot topic especially because adoption was just beginning to take off in Africa, and then Nigeria specifically last year, things were blowing up, right? And then we had the hammer from central bank. Affecting different platforms. I mean, we have Luno here, we have Binance here, and then also Quidax. So what we've seen is definitely trades are still happening, right? Even on exchanges, you'll still see trickles of some volumes on Luno and Binance. I would assume that there'll still be some little trades that are happening, but nothing close to the volumes we we've seen, and then like things had just started to take off beginning of the year. So a lot of people are now diverting to the P2P model, right? So exchanges are building P2P solutions, pushing for P2P adoption, but even that creates a huge problem, because when you think about the newbie who's just trying to get into crypto, who's just trying to explore, right? And then you put the wall of P2P in front of them, and then you try to advise them that, oh, yeah, so when you get scammed, it's not really us, it might be the person. And then the issue of disputes with P2P, it's insane. Like putting up all of this world. And then the greatest sorrow, the greatest sadness from all of this is that Nigerians, because of this, Nigerians have been excluded from the global prosperity, right? Think about it. When all of this was happening, Bitcoin was something around 38K. Now you have people say, oh yeah, I want to get into Bitcoin, I want to get into Bitcoin. And now Bitcoin is 56, 57K. It's insane. So now all of that prosperity that some might have gotten into, getting in at that point in time, because they can't get in, because you can't easily deposit on Quidax, you can't easily deposit on Binance, you can't easily deposit on Luno, or even get your cash out. Like it's cutting out. That's one of the greatest issues that we've seen. It's first cutting out a lot of Nigerians from prosperity that a lot of people around the world are actually enjoying. So it's insane, right? Then on the second hand, we're seeing a lot of activity go to P2P exchanges, and then other exchanges are also now trying to navigate the issues around having to help people get in money and then get out money from the platform, like we're doing at Quidax. But essentially, it's still being able to find a way to be compliant, right? Because the CBN's regulation is for non-banking financial institutions and banks to not support crypto exchanges. Here, right now, as an exchange, customers want to facilitate Naira transactions. They want to facilitate Naira withdrawals. How power the world without going to probably banks.
Buchi, we're losing you. Sorry,
okay.
Buchi,
Okay,
we're losing you. I'll come back to you. Hopefully, we can stabilize you can get your line stabilized. Let's move over to Marius. Marius, Luno has a lot of presence across Africa and Nigeria included. You guys were obviously affected by this recent regulatory change. What are you guys seeing as far as regulation across the continent and other relevant factors that are affecting crypto adoption both positively and negatively?
Thanks, FARZAM. So I think, if you look at some of the challenges affecting adoption across Africa, I think firstly, it's still very much the early days. We often think, and I think exchanges often think that, most people know about crypto and they know how to buy and sell it safely, but that's really not the case. So I think one of the main challenges still for us is, we don't have enough safe access points, for people to use their local currency to buy crypto and, vice versa across Africa. So infrastructure is still a big challenge for us, and people across Africa. And, Africa, unfortunately, at this point, it feels like it's almost dominated by scammers, and you can understand that, and that the people would fall for that because of desperation, we're in difficult times. We're also in a low trust environment. Consumers, regulators, banks, they don't trust you. It's an unregulated industry. So it takes a very, very long time from starting a discussion, let's say with a bank, to giving them comfort, that you have a legitimate business and, strong compliance controls, etc. And then, as you pointed to central banks and regulations, we're seeing very little regulatory guidance across Africa, And the result of that is that it's making banks the de facto regulators, and that's a big risk to crypto businesses, for obvious reasons, because customers can't, use your product effectively. And then also fintech at large. People think, Africa, emerging market, similar in Southeast Asia, it's very easy to launch a fintech business because you can very easily solve a problem. But it's not that easy, not in Africa at least. We've seen an example of M-Pesa, and they made it look very easy initially, but that's really an edge case, and they're a very powerful organization. smaller businesses, crypto companies face a lot of hurdles, regulatory hurdles that they have to overcome. And then lastly, in emerging markets, relationships take a very long time, to form and to establish. And unlike in other regions, maybe, more money in Africa doesn't make you move faster. So these are a couple of the challenges, that we're all facing, across the African continent.
Thank you so much. So Brenton and then Marvin, I want to also talk a little bit about the use cases in Africa and what you guys are seeing across the continent. We know that ETH fees are super high. Bitcoin fees are also not insignificant. And this is a promise of a financial system that's meant to bring down costs, make things much easier for people. So talk to us a little bit about what you guys are seeing as far as what are the use cases? I mean, are people, are these fees scaring people off and are they not coming in? And if they are coming in and there is activity across the continent, why? What are they doing? So Brenton, over to you and then to Marvin.
Sure. So thank you for that, FARZAM. I think coming to the first point, quite interestingly in Africa, in first world countries, I think a lot of the demand is driven purely for investment purposes. But in Africa, we have some unique problems. Things like currency devaluation, quite strict capital controls, and that prevents people from doing certain things. And we've actually seen quite a bit of uptick from platforms like P2P that ROSELYNE mentioned for inter-African remittance, and then also to remit money across borders specifically. And I think particularly it's a problem, the ETH gas fees and the network congestion, and then, as you said, Bitcoin fees in and of themselves are also not insignificant, have sort of been a problem over, I'd say, predominantly this year. And I think that's one of the core reasons that Binance built out the Binance Smart Chain as well. So myself and James Preston of Global Crypto were actually chatting about this yesterday. BSC and the BUSD stablecoin essentially make it possible for a person to send a single dollar anywhere in the world within 3 seconds for essentially 3 US cents, which would be 3% of the $1 amount. And just hearing that, sort of opposed to your current systems, just sounds mind-blowing. So I think coming back to some of the things Marius said, a lot of the activity we see now, even from the regulators, is very focused on crypto asset investments. So although we've heard very little about regulation there, we've heard even less, I think, when it comes to implementing the actual use case of these new sort of monetary protocols. But I think one thing that's lended more to the adoption in Africa, so I mean, we all know that Nigeria is responsible for the most Google searches globally, with originating for the term Bitcoin. South Africa was named as having some of the highest crypto asset ownership rates globally. And these things are, yes, because of the investment case, but I think more so, and we see such an aggressive uptake in Africa, is because in addition to the investment case, they also solve some of our pain points: inefficiencies in payment systems, expensive and long remittances, being able to make and receive micropayments. So in addition to the investment use case, I think we're seeing a lot of these things occurring, particularly within the African market. And that really speaks to, the rate of adoption we were all talking about. Marvin, feel free to jump in there.
Yeah, I think we lost our moderator.
Oh, moderator, yeah.
You kept going, though. I respect it. But yeah, I have, nice to meet you all. Very unique perspectives in different parts of the continent. And my perspective is slightly different, I guess. We're building infrastructure, so security token platform, to kind of take the existing paper assets and transform them into digital stuff. So it's very much more of an infrastructural play. And in that infrastructural play, crypto has become a part of our culture, right? So everybody on the team has been paid in USDT, USDC, whatever they want for a long time. All of it happens on Binance. So an example of real crypto adoption is, Binance is one of our investors. So we were just like, we might as well just use this infrastructure. And we were using Binance for a while. And then when gas fees got high, we were like, damn, like it cost us $20 at one point to send someone's salary who might be like $300. Like they literally losing most of their salary transaction fees. So then we switched to CRC20 chain. That's cheap. I guess BSC is the next one because that's just a few cents. But in that process, members of our team and my team have taken crypto, are paying up rent, literally off just yields and interest. There's people who've like remodeled their home, who've like had tangible effects in their daily lives. And I think how to tie it on to what everybody else was saying is that I think it's very difficult for Binance, Luno, all these different platforms to be doing what you're doing because you're always going to constantly be a source of attack. I remember there was a while ago when a Nigerian company started to announce how much they transacted and all that stuff. And I was like, oh, please don't do that. That's terrible. It's just going to attack you, right? Whereas I think, I'm sure Luno is the case, Binance I know is the case, I'm sure Pesabase is the case. I think it starts at doing the things that don't have to be in a regulatory eye, right? And creating kind of compliance control, not in the regulatory eye, but I mean things that have not really been outbanned. You know what I mean? Like no one has said that someone can't be paid their salary in Bitcoin or whatever it is outrightly. Like there's been other things that have been outbanned. So I think that's one level that kind of starts and where it could kind of scale from there. And then for the people who are receiving this cash themselves, I've seen so many of them, once they have the tools, like was Brother BUCHI was saying over there, once they have the tools and education and the training, which is part of building the culture into a company, people start to be able to do themselves, man. I've seen people on Pancake Swap. I've seen people on Aave and Compound making a bunch of money on loans. I know someone who like paid off all of their real world asset property loans using crypto yields and interest. So you have this interesting conversion between the real world assets and then the crypto based assets. And I think that's accelerating. And I think the next phase of what regulators are going to try and ban is that nexus, that bridge between real world assets and crypto. And that's going to be where the pain point really kind of feels itself, because there's only so long people can trade crypto assets that are not tied to value in the real world. Tons of people have a bunch of real world assets that they need to be able to put on chain too. When regulators ban that, it's going to be even more painful than it is right now.
Thank you so much, Marvin. So thankfully we're back. So following on from what you were talking about, Marvin, you know, a lot of people are talking about the promise of DeFi, and you mentioned that you've seen people on PancakeSwap and Uniswap and others. How real is that for Africa right now? Like, you know, the need to hold your own private keys, etc. You need to be pretty savvy to understand really how to protect yourself in that environment where you cannot call anybody to reset passwords, etc. Is that something that we're seeing that's taking off in a big way? Is CeFi, centralized finance, still young and they're going to be continuing? I'd love to hear your thoughts, and hopefully we have a divergence of views over here. So let's take it popcorn style, whoever wishes to answer that first.
Sure. So I think I don't mind jumping in first. Yeah, so just from my perspective, I think I completely agree with the original sentiment. I mean, yes, so personally, I'm a personal user of things like PancakeSwap, etc. Being able to access market-making protocols, being able to provide liquidity to markets from, you know, something as minuscule as $1 is absolutely mind-blowing for the African markets, where we really do sort of have a friction in accessing financial infrastructure. Not so much in South Africa, but particularly in the rest of Africa. And like you said, it's very, very difficult to see somebody go from a mobile phone, potentially simple banking application to I've now got my private keys stored, my seed phrase, I've got redundancies built in, you know, I'm doing on-chain transactions. So I think that's exactly where the Binances, the Lunos, the Valors of the world step in, and we provide that intermediary step. So long-term, we'd love to see the user experience get to the place where users can interact with the protocols directly. But on Binance, for example, if you don't have that level of technical proficiency, you can use things like our liquid swap and buy stable coins and earn USD yield from 100 Rand, you know, or very insignificant amounts of value. And you can also access these really high yield products. So Binance Launch Pool, etc. And allows you, I think, to achieve some of the benefit of that market without putting yourself out there in terms of, or as far out there in terms of the risk and technical requirements of getting started.
Yeah, I think it also kind of depends on. Sorry, go ahead,
Mark. Go ahead, Mark.
Yeah, I think it also depends on the kind of user we're talking about, right? Like, there's a huge growing class of technology-enabled people who are working at startups. Pretty much anybody working at a startup can figure out how to manage private keys if they're trained on it, right? So it kind of comes back to what I was saying earlier. I think one of the easiest ways to do this, and I guess not to deal with as much as this headache of regulation, is to train teams, right? Like, what if all startups created a crypto infrastructure for themselves to bank on, for example, and then they trained all of their employees to be able to hold seed phrases and things like that. We've had employees as well, or team members who lost their seed phrase, not their seed phrase, lost their passwords to Trust Wallet, for example. They figured it out themselves. They got the seed phrase and they were able to get back in, right? Just because of training. So even as another company that I admire a lot called FlickPay, that is, if anybody's seen it, shout out to FlickPay, it's an incredible company. But it's basically like banking infrastructure for African fiat currencies and several cryptocurrencies. So similar to Binance, but focused on the API kind of banking, CeFi. And they've trained all of their team and staff to be able to handle and do treasury for different kinds of cryptos and fiat assets. So I think it depends on who we're talking about. And a lot of people can be trained to manage this stuff themselves, because ultimately, do we want to build an ecosystem where people are working on apps and don't have access to their keys? I think is an important question we would need to ask and then design around that.
Yeah, I think it is, to your point, I think the users are very divergent, not just in Africa, across the entire world. There are going to be those that want the option to hold their own private keys. There are going to be those that want the option to rely upon institutions that they can trust. Trust is a very, very scarce asset in today's world. And so those institutions that can trust it potentially have a role to play in the future. Moving on to really what the biggest risk is, I would like to go around to all five of you and to say the single biggest risk in Africa to progressing the crypto kind of landscape and development. What would that be? I've got an idea in my mind that I'll come to at the end, but I'd love to hear. So, Rosalind, let's start with you and then go to the rest.
All right. As per my observation, then just building up on something Marvin mentioned, is that you have varying levels of financial literacy in the first place, that the majority of the population generally is not very conscious of financial investment past saving and maybe real estate or stocks, because even for those who probably hear about the billionaires in their country, then they probably know they just has something to do with money. And for as long as that remains a blanket term, like using money to make money or just investing, but not in particular breaking down to specific instruments, be it stocks, bonds, futures, and now getting into the world of DeFi, interest-bearing instruments and the like, it's that the longer it takes this info to get to the general public, and not just to the public, but even the younger generation, like they're not going to aspire to this in the first place. So DeFi and crypto in the future remain or could be at risk of just being extremely niche. And I say extremely niche because a lot of my friends do ask, okay, how can I take this to my grandma? And you're like, okay, first of all, breaking that down into someone's language. So like for Kenya, 42 to 44 languages. Not everyone has the patience to literally translate some of this stuff to first, like at least I've seen quite a number of efforts within like Tanzania to translate crypto stuff into Swahili. So translation is the other gap, that you have at least 2,000 languages in all across the continent and really all around the world when you think about diversity in that aspect. So more people do need to be patient enough to translate this so that especially the elder population and those who may not be in urban areas will have access to that. So really, financial literacy, language barrier, and goes without saying internet penetration, because if we put it in a scenario of did the chicken cross the road, or did the chicken come before the egg, or did the egg come before the chicken, then will it be that when more people have access to internet, then they'll automatically kind of flow into the DeFi space, or will they have to kind of know about DeFi, then demand the platforms then to interact or invest in these platforms? So those are some of the questions that would be or present really high risks to DeFi or crypto adoption in the next decade.
So access broadly, whether it's through internet or through education and knowledge, is your one kind of big risk and obstacle. Thank you.
And you'll find a lot of these wallets, for the first-time user, don't necessarily have the optimal or best navigation, but that's something that's really on the tech side being amazingly worked on. I mean, Binance, Luno, all the platforms here really are. I've either used or tried or from my end, I have tried. But for the one who is completely new to crypto, then seeing private key be like, is this my PIN, or what is this? What is my seed phrase? And these are the questions then that some people will ask, not because they're ignorant, but because this is the first time that they're trying to put in some capital and realize some gains from that. So really the education aspect is inevitable.
So maybe before we move on, Roselyn, because I think we've got a lot of international viewers as well. When we talk about Africa, oftentimes the old thought was that it's a completely cash-based economy. Not many people have access to the internet, etc. But that narrative is changing, which is that actually there's a lot of access to the internet. It's less hard cash. We've got M-Pesas of the world in Kenya, everybody refers to. But what is the reality on the ground? When you talk about access to the internet, is that there, or do you still see that many of the people that in Kenya do not have access to the internet, for example?
So a lot of people do have access, but in terms of quality, let me just break that down. So like in Nairobi, I can get 4G and soon enough 5G, right? But step outside to now the more remote areas away from urban centers, just let's say about a 20-kilometer radius, the further away you go, the less stable the connectivity could be, because sometimes even when you're considering a property to buy, then one of the signal reception factors is that one of the factors you have to consider is actually just signal reception, that with the main providers, the Safaricom, the Airtel, and Telcom, then there are varying signal levels of strength that you don't necessarily get uniform connectivity all across the country. So that's exactly what I mean. So you might have internet, yes, but maybe like 3G or 2G some places.
Okay. So there's still to be done on the access front. Thank you. Buchi, from your side, the single biggest risk that is posed to the crypto ecosystem in Africa?
That's very easy. I think everyone can guess what's on my mind. Regulations. So you can be doing business and be this high, and tomorrow you're out of business, right? Like by no fault of yours, right? So it's nothing. It's just regulations that anything can happen at any point in time. So and it's off the top, I would say it's not just Africa, right? So this can happen almost anywhere else in the world. Maybe they'll be a bit more lenient. Maybe they give 3 months for compliance. Maybe they give 1 month for compliance to get your stuff in order, right? But yes, regulations and how they can truly impact business and then innovation, all of like the work that has gone in. It's a huge.
Thank you. Just by way of hands, because we're running out of time, between Marvin, Brenton, and Marius, which ones of you would have said regulation as well? All right, Brenton? No? All right, let's go to Marvin. I want to hear what yours is, and then Marius, what's your biggest risk? Go ahead, Marvin.
I'm a lawyer, so I guess I have to protect the regulatory people. No, but really, regulation exists for a reason, right? Like, I think in the crypto community, we spend a lot of time vilifying regulation instead of, we intelligently build around it because we don't have a choice. But we see it as this great threat, and it is. But there's other things that we can be doing in the meantime to protect ourselves. I think the biggest risk is actually scams and hacks to the ecosystem. The kind of scams and hacks that would happen in Africa could bankrupt people for like 6 generations. So, while we're looking at regulators, like as members of these different companies and all that stuff, is like, are we sure our compliance controls are up to par? You know what I mean? Like, I build a startup. I work with a lot of other startups. Compliance is a very difficult thing to do at any stage of a company, right? So it's like, well, are your compliance controls in a place where you can guarantee that the chances of something happening are very low? Probably not. You know what I mean? So I think the regulation exists for situations like that, at least it's meant to, not always. But I think that's one of the biggest risks. I think the second biggest risk is that all of the central banks across the continent decide to develop their own digital currencies. I think that's one of the second biggest risks instead of trying to huddle under one. What happened with NGNT in Nigeria, BUCHI, brother, I'm sure you know about that, was one of the most incredible things to happen in the crypto space, but it went almost, I guess, unnoticed. So I think that's the two major things. Central banks not coordinating to release digital assets that can move across the continent. They'll just create these silos again. And the second one, the scams and hacks. I think regulation to me is just inevitable. So we might as well just build and design around it anyway, because we can expect that it's going to be horrible. So it doesn't make sense waiting for that horribleness to happen.
Yeah, look, I think, there are many risks, and scams. I mentioned earlier, scams definitely is one. It's crippling, the growth and the trust in the market across Africa currently. But I think another risk or challenge that I think the industry is facing is, that of instant gratification. People expect, crypto to instantly, be better than the existing financial system. People expect it, they want it right now to be better. Must be safer, faster, cheaper, more secure. But the reality is that, Rome wasn't built in one day, and the existing financial system, was built over hundreds, thousands of years, really. So, I think, we're only really right at the beginning. We're seeing a new class of investors, retail investors across emerging markets, across Africa, only starting to invest for the first time ever. It's not sophisticated investors; it's first-time investors. And maybe it's because of lower interest rates. They've got more cash to invest. It's because of the financial environment across Africa, weakening currencies, etc. So linking to this, really, we're coming back to stick to the basics. We're coming back to building the safe on-ramps and off-ramps, the infrastructure, for these investors to enter this market. If we look at some data. Only 20% of people sub-Sahara use mobile money services. So that's still a very, very low percentage. So people often try and front run with these crazy ideas and trying to solve problems that we'll face 50 years down the line, when we really just have to focus on the basics, and especially across a market like Africa. So it's instant gratification.
Okay, thanks. So a bunch of different things: access, education, information, regulation, instant gratification, a bunch of things. So how are we going to solve some of these issues? And I'd love to hear from what your particular institutions are doing. So as an example, just today, the Financial Sector Conduct Authority in South Africa, one of the regulatory bodies over here, came out with a warning to the public to say cryptos are very dangerous, please be very careful. They cited some of the scams that are happening, but they also kind of insinuated that crypto itself is a risk. And of course, there's volatility, but it has done very well over the last year, as we all know. So what can the crypto community do? Yourselves and the people listening, things that are within our power, right? So as far as, is it lobbying of regulators, or are the regulators and the current vested interests in the current system, say some of the banks, etc., that are vested in not necessarily ushering in this new paradigm? What is it that your institutions are doing, and those that are listening can do to help with crypto adoption across the continent? Again, popcorn style, whoever's ready to answer.
I'm ready. I think just highlighting something that you had mentioned earlier is a trust that we can't bypass trust. Crypto, in and of itself, on the tech side, we can argue how mature it is, how ideal it is, how much of a yield it has. But on the people side, we have to build trust. I mean, in the first year that I started talking about like cryptocurrencies and blockchain, then enough of my friends would be like, oh wow, this looks cool, like, oh nice, like thumbs up. But 2 years, 3 years down the line, then more would ask me, I would actually want to invest. Please walk me through this. It's not that they didn't trust me in the first instance, but take it as someone who has never heard about cryptocurrencies before, but now seeing that there's conflicting views on it from both the government and then now me as an individual talking about that. So if they didn't trust me, didn't see my consistency, did not see me completely of even warning them about some of these scams, then that trust would not have been worth catching in much later, further along the line. So for me, it's a very easy pick. Trust. Just be consistent. If people don't buy into your platform, or people don't download your app, or people don't sign up to be part of your community, still be present in terms of being an authority, engaging and answering the questions that they have. However, however nascent these questions may be, but like just be present, be consistent, and build the trust that will allow these people to come 2-3 years down the line and be probably some of your most loyal customers.
Thank you so much.
Yeah.
And then, Buchi and Marius, I believe you guys are lobbying the regulator. It would be great to hear a little bit of the insight of what that experience has been like, and what you're doing on that front, and any news that you can share with the audience about what's happening in Nigeria.
Okay, so in terms of what we've been doing, right? Now, I'll even piggyback off for what Marvin had said. When we see regulators, I mean, at least when we have Quidax say regulators and regulations, we are begging for regulations. We're saying, just tell us something to do. From day one at Quidax, we've always been very strict with KYC, right? And then we follow the KYC, the policies given to banking and non-banking financial institutions, right? And then we're saying, tell us something, tell us minimum capital to have, tell us our KYC policy, what do you want us to do, transaction limit, anything. But we're self-regulating. Luno has also done a great job at that. When I look at it, right, trying to onboard on a crypto exchange is not an easy, no one, for most platforms, the most recognized ones, they don't joke with KYC, ML, and that, right? So with regulations, we're saying, please regulate us. We are engaging, even before all of this happened, we're engaging SEC, put out a position. We're saying, hey guys, tell us what to do. And then they brought out this platform. They say, oh, you can come and register here. And it didn't really work, right? The platform didn't work. We kept going to them, hey guys, you said it's not working. Please help us, regulators. That's all we're asking. We're not saying, oh, we don't want regulators, because we know that when regulations come in, it enables the space to grow. It allows the space to grow. It allows confidence in the space. And then it removes all of the bad actors, all of the fly-by-night shops. So we're literally begging for regulations, right? Now, in light of all of the CBN support, there have been several engagements, several at CBN. We've written several letters. We've done drafts of regulatory framework. We're giving examples of stuff that can be done. I think we did something.
I'm just going to interrupt, forgive me, because we're running out of time. But if I hear you guys, you've been doing everything correctly from the KYC perspective, you're writing, you're lobbying, etc. I want to see if Marius has anything else to add to that. We've literally got 1 or 2 minutes left, and then I want to see if anybody has some concluding comments. So let's keep them brief, please, the last concluding comments.
FARZAM, I think as a starting point, we all have a big responsibility. We're building a new financial system, and there's interaction with the existing financial system. So I think it's a responsibility on our side to work with regulators, with banks, to build a safe bridge between the two worlds. So, to add to BUCHI in Nigeria, some of the things that we've been doing there, is sharing some of our learnings from other markets. For example, Malaysia, where the regulator, came out, they put controls in place, regulations in place, and they've actually acknowledged that, if we don't regulate, a lot of the volume will move underground, and there's no way in which we will be able to track that. Stay ahead of the use cases, etc., etc. So, that is our approach. Go out, share our learnings from other markets, show how valuable that has been, and try and assist them from that perspective. But, it's you don't always see the political will. and it's a long and slow process, but it's something that, we all have to continue doing.
Great, guys. Thank you very much indeed.